Hello, ladies and gentlemen. Good morning, good afternoon, and good evening. I hope everybody is really doing well. And welcome back, guys. Almost after 1 month, I'm seeing you all. And first of all, my sincere apologies to each and every one of you for making you angry and not being active for whatsoever reasons. But so now we can start. Alhamdulillah. So how things in your country, guys? Currently I'm here in UAE and it's good. Alhamdulillah, that's good. So how things are in your country? And the market is pretty much slow, honestly. Since I was not here, honestly, I was not even trading BTC. I was just probably looking for some shots on Tesla. That's what I will be taking profits on. I already booked profit. I just need to update it as well. So the most important part about this whole thing is I think I've learned a lot of things in this whole 1 month break. I would say I need to reflect something and also need some mental peace, honestly speaking. Well, I don't know what you guys think about it. Many might also think that, I mean, everybody has their own thought process and everything. What I feel is, we just have to be grounded, you know. That's what I can say. So, looking to the market side, first of all, I won't be able to talk much about what's happening here. And basically, honestly speaking, I can't, and I should not, basically. What I can say is that I don't know, but probably what I can say is you should at least have, I think last year also I was mentioning this point that you should at least have 6 to 12 months of savings in your bank account, or probably you should have it in hard cash or silver maybe, or maybe gold. But you just have it. Probably hard cash is good if you have it in your hand. So that's what you should do. Okay. Even I would suggest that probably. So times are tough, and you should not depend or rely on any third party, basically, for transactions. I mean, you just have something in your hand. That's what I can say. So what do we have for the market, guys? And if I just have to look at from the USD dominance perspective, I think the USD dominance is pretty much accumulating for maybe another leg up, or it's just like topping out and just forming some sort of a top, but we just need a double top pattern. So that's what. But looking to the structure that it has, if I just have to inverse the chart over here, just looking to this inverse chart, what I feel is it's a very solid, a very, very, very solid, I would say, a bear flag over here. That's what I can say. The pretty much bear flag that we have it over here, and some sort of a bearish retest is happening already. But already we have this green box as a breakdown zone. So we already broke down from these levels, and I'm unable to count it because we are missing one more wave. So let's say, for example, this structure is what we have. Let's say this is some sort of a wave 1, 2, wave 1, 2, or maybe let's say this is some sort of a WXY, XZ. Let's say this whole thing is some sort of A, B, 1, 2, and then you have pretty much bigger wave 3 over here. And then you have wave 4, so you need a wave 5, one more down like this. And once we have this wave 5, I'll pretty much chop, another one more wave down like this to finish. There's a bigger, this bigger, move, because this is like a clean, some sort of double top over here. So we need that one more down like this. And once we form a very similar structure, like, you know, three-leg accumulation, then we go for the breakout on the volume. So that's what is the bookish theory for USD DOM. It's a very simple theory basically. And the structure itself tells me that one more push is pending on a USD dominance perspective. Glad to hear you, the fam. You're safe. Thanks, John. I hope that you are safe as well. Hi, Rollman. Hi, Ali. Hi everyone. Ali is Bulgaria. Fine, perfect. I hope the crude prices and the gas price have not much affected over there, but I'm sure that the crude oil is not yet topped. Probably we're just gonna have a look at those numbers as well, and we can probably just, you know, figure out as to exactly what might happen. I mean, if you remember, I was pretty much bullish on oil, you know, and I did mention that something is going to happen, but I was not sure that it's going to happen very quickly. But yeah, for the very first time, my technical analysis played out because of the news. I mean, for the very first time, I mean, this has happened. So something very new for me as well. So if you just look at from the daily perspective, the RSI is at 50%, and of course, and we haven't yet formed any bull divergence or anything like that. But honestly speaking, it's a very good support on the daily. And if you look at from the weekly perspective, even though we have lost RSI based MA, I just expect, you know, this structure, probably like a double bottom sort of thing. Maybe 6.98%, one more down, and then probably look for an upside like this. Is very ideal from a weekly perspective, because what we want is, if let's say RSI really want to top, what you need to see is some sort of a very cool double top sort of pattern. But of course, it's not going to happen very quickly. I mean, the double top that we have seen like this, the triple top, you know. So what you want to see is, yeah, the intermediate support. This is where the support is, 61.4%. So maybe what we can do over here is we go one more down, form a lower term time frame bullish divergence, where, you know, RSI make lower lows and the price makes higher highs. I mean, this is a very hardcore possibility. So we go towards 7.47%, run up like this to 8.81, maybe one more squeeze up like this, and then after squeezing up, we finish the 5 waves, because that is probably would be a very good 5 waves. And I think that is pretty much a very easy way to form a very good solid, you know, bad divergence on the USD DOM, and also some sort of a head and shoulder pattern, bad divergence, very solid bad divergence on the USD DOM on the weekly time frame, and then we just go another higher highs, form another bad divergence, and then boom, the new bull run starts. So it's a, you know, it's a very, very, very common pattern. Probably it's a very good pattern on BTC. So very, very much hopeful that, you know, we are going very, very close to bottoming out for this whole new bull run season, or you can say the bull market. So you just need to have cash in your hand to buy when the time comes. Appropriate. I already given my limit, and that's what exactly we are going to play. But that's what I'm going to tell you, that we are very close in bottoming out, guys. It's just like we just need a bad divergence. That's it. Once the bad divergence starts forming, it's a very clean scenario for anyone to start, you know, to start building a very good positions on the long, from the long perspective. So I do think that USD dominance needs one more push up, and we need one more push up, higher highs, forming a bad divergence, some sort of thing. That would be really, really nice for us on the weekly time frame. Okay. Talking about the daily time frame, as I clearly mentioned, daily time frame, there are two possibilities over here on the daily. From the count perspective, what I feel is, let's look at an H4. It's a very clean ABC, and it's not 5 waves, some sort of a WXY, some sort of WXY sort of thing. 1 2 3 4 5 ABC, 1 2 3 4 5. So practically, if you see here, this is 5 waves ABC, 5 waves, and maybe another ABC. So what I feel is we are likely going to see a small push down and then one more leg up towards this zone. And just wanted to see something like this, and then maybe one more down like this, because we want to form 5 waves on an upside. So once it forms 5 waves on an upside, that would confirm that the bottom is in, and we are likely going to see something like this, ABC, and run up like this. So that's the first way of looking at it. But however, the second way is, if this is clearly irregular expanded flat, and we just need to figure out whether this irregular expanded flat is a valid one. It shouldn't go beyond 1414. It went slightly above 1414, very much close to 1618. So most likely this is a valid one, meaning that this is a very high likelihood that this can be an irregular expanded flat with this move as wave A, this is wave B, and we can have a very good wave C, like more choppiness, some sort of a more choppiness and something like that. And we can go towards 702, maybe 786 Fibonacci levels, and then like one more down, and then we go up. So there are two possibilities, guys. Either this move is ABC, or this is clearly 5 waves, and we are looking for higher up, basically. Either we run up from here, or we just run up and then down, one more down like this, and then we run up. But overall, as I mentioned, the weekly time frame, we just need to see a very good bull divergence on we are already going to see a bull divergence. It just need a little bit more pressure. So small down, form a bull divergence, close weekly this week as a bull divergence, and collapse probably next week on. The USD DOM can run up higher. So we just need to wait and watch for a very possible bull divergence formation. Overall, I see that we need to form higher highs. So for those who really don't understand, the price needs to do something like this. Okay, this is what the price needs to do. Okay, and once the price does something like this, what you want to see is RSI does something like this. So RSI needs to do something like this. Okay, so let's say if red is your price, then yellow would be your RSI. So that is going to be your concrete confirmation of that the trend is that we are exhausting the trend. The trend is getting exhaustion, and we will be looking to start building positions for the market. I've already given my limits for long. For those who really want to short the market, I think the best way to short is when USD dominance goes around 7.7 to 7.63%, because we have a very good order block here. This is a very good order block. So this is where probably you should start building some short positions on the market. Your invalidation is very tight. Your invalidation is going to be here. This is clearly your some sort of, as you can say, a premium zone for the market and discount zone for the USD dominance. It's a very good zone where probably we look for good bounces. So this level has a lot of support probably. So I personally think that the first red box is the point of interest for the market to start building short positions. And also I clearly see that the long might start booking profits. So that's what I have for USD DOM. Talking about the total crypto market cap, I think this was the chart that I last drew, and this is exactly what things are playing out. I wanted to see it going around $1.75 trillion. And if I just have to probably tell you with the logarithmic scale on the chart, of course, the logarithmic scale suggests that we would be aiming for a very, very, very good, golden pocket zone. Now, talking about the golden pocket zone, I need to see my Fibonacci levels, and also I don't know where is my harmonic. I think my harmonic is not here. It's maybe somewhere else, but we'll just go with the cipher pattern. I think I am the first probably who identified this cipher and was very confident about this playing out. So we would be aiming for 786 Fibonacci levels. That's the good levels for cipher, which is around $1.48 trillion. A very similar cipher we had, when we were around in 2020, bull run, when we started off with the bull run, we had a very good similar cipher, pattern formed. A very good pattern it formed. It just went around 786. It's just like, yep, almost 786 Fibonacci levels. So probably I just don't want to wait for an exact accurate numbers, but it's very much alike what I see so far. If the price action is very, very similar. You see this whole, accumulation that we had previously over here, and what we did was this accumulation, what you're watching, the accumulation you're watching here, after which we broke out and went crazy up like this, and then we went under these levels. I see a very similar accumulation over here in this box. So that is going to be an accumulation what you have, or what we are expecting. So I'm just going to hide it so that I can just draw probably a perfect box. And well, yeah, the box is perfect. I just need a liquidity. Oh, perfect. So now I can just probably unhide it. So a very similar liquidity box that we have, and a very similar thing. So you see we had an accumulation, and if you just look at the volume was building up slowly and gradually, and then out of nowhere it expanded. So over here as well, if you see, the volume was almost flat, and out of nowhere it expanded. So this was a very good, idea of what we can say that the market started bull run phase. And this is exactly the initiation of the bull run, almost close to 800 billion to $1 trillion. And now, as we have seen a very similar thing, I do believe that there is a very high likelihood we just probably sweep this lows, take this liquidity, the phase that we are aiming for or looking for, the market maybe is like something like this. Probably we can just do some sideways accumulation. As I mentioned, USD DOM just need to take this lows once and for all, and then probably we run up like this, accumulation happens, and then we start another bull run. This is what I feel, but we might just probably front run as well. I mean, the idea is, is to, catch that levels. I'm damn sure and 110% sure that once we start going towards this green box, or you can say the red box over here, people will be looking to start screaming that we have a CME gap here. We have a CME gap here around $848 billion. So just people will start screaming that, hey, we want to go there, we want to go there. And they just probably will look for lower and lower. But that's something I'm going to avoid it, because I'm just going to play my plan. Now, if you just look at from a logarithmic perspective, over here, logarithmic perspective, I'm just going to hide my cipher pattern and some brush as well, of course. Also red box for now. Okay. So if you look at from the logarithmic perspective, BTC need to finish its bull run. I mean, we need to finish it off. So how can we finish it off? And do you think that the wave 3 is in? I don't think the wave 3 is in, because look at the volume here. The volume here is insane. That was the biggest volume we have seen in 2021, like almost huge volume. And we haven't almost like $312 billion. And over here, we have seen a good volume, but not close to, not $312 billion. It's roughly around, we need to see, but the volume is pretty much slightly higher than what we have seen in 2021. Yeah, 420 billion and 322 billion. So 100 billion more, but Still, I'm not convinced that if this is wave 3. But let's say, for example, if this is your wave 3, this whole 5 waves was your wave 3, then I just want to tell you that wave 5 is the final wave. And normally the nature of wave 5 is the more, bigger, or the more, I would say longer the wave 4 takes it, wave 5 will just probably zoom in very quickly. It's just going to finish it very fast, very quickly. It won't give you time to enter things. It will be very quickly. It will just probably crush everyone, Meaning that what I can say is whenever we bottom out, your wave 5 is likely going to be, let's say wherever we bottom out. Let's say if this is where we are bottoming out, your wave 5 is going to be something like this. It's just probably going to do something like this. That's how quickly it will go. It won't take much time the way this whole pattern or whole wave took it. So yeah, it won't take that longer time. So wave 5 is going to be quick. Now, whether our target is going to be that far, we need to check, we need to verify it. But at this moment, logarithmic scale makes more sense to me, and hence, I feel that $15 trillion is a very high likelihood. Maybe even $11 trillion is a possibility, because we have 1886. But looking to this whole structure and looking to the liquidity that we have in the market and the market scenarios that we have, we can probably even look for 10 trillion, anywhere between 1618 and 1886, because it's a wave 5. And let me just check fibs. Yeah, the wave 5 normally go around 1618, can even go to 24140 if it's like a full-fledged extension. But let me also check an Fibonacci level extended tool to see where exactly we can expect. It all depends on where and how we bottom. Let's say we are just simply bottoming under 1.65 trillion. Maybe we can front run the $1.48 trillion as well. Let's say this is the support. So the 1:1 extension is around $8.63 trillion. I'm just going to mark it in white so you guys can know it. And the last extension probably we would be going towards is 1.38 to 1.414 trillion dollars. I mean, somewhere in between it would be. It's like the most extended. It should not go beyond these numbers. No. Whenever, in case if it goes, then it's just going to dump very hard. But it's going to be like a blow off top sort of thing. But for now, what we can expect is $8.63 trillion is a bare minimum target. 8.6 to $10 trillion is the bare minimum target we can expect for BTC. So let's say even if we are buying from $1.67 trillion till $1.4 trillion with an average of $1.55 trillion, we can expect to make at least 5x and 5x to 6x gains with probably no leverage. But however, definitely, as I mentioned, that we are going to build a very good coin margin longs positions with maximum 3x leverage, so we can do 18x. That's what I plan for this thing for only BTC. I'm not going to talk about Ethereum at this moment. I will just go with ETH later on once we are done with BTC targets. But that's what I have in my mind for total crypto market cap. Similarly, if I have to tell you that where should we put our money, I definitely think we should start from BTC, and then definitely we should move our money from BTC to Ethereum and so on. But definitely Ethereum is going to do or perform really well. But we need to see where exactly we should have, we need to identify those levels. I've already given you the levels for ETH. So that level is the most optimal trade entry zone, OTE zone. It's a very good zone for the market to, or for ETH to really go long. Other crypto market cap is, for many, this might be a very good head and shoulder, very good 5 waves over here, a very clean head and shoulder, I know. and it's a very good 5 waves as well. So what you want is $112 billion, and I feel that maybe one more down like this would not hurt, and it would be very amazing for the market. A very good opportunity for other crypto market cap to basically altcoins. And not all altcoins are going to perform, but I would say maybe we can. I think we should stay away from AI coins. Maybe AI might just probably crash in this year as well. So AI coins, you just need to stay away. But what we should be looking for, in my view, is DeFi. So I think the way I mentioned previously is 2018 coins would be doing amazing, and it just did amazing. XRP, Stellar, Cardano, they all did pretty much amazing. ZEC. So I do think that DeFi will be doing really amazing the next bull run. And I believe that it's not about belief, but it's all about the technical analysis and the structure it's forming. This structure is a very solid triangle. So if you just look at from here, this is the total DeFi crypto cap. For those who really, for those who really don't know what this is the total DeFi market cap. It includes all DeFi coins from top to bottom, okay? Excluding meme coins. So what you can see from here is that we are missing one more wave. So let's say this was wave 1, this was wave 2 that we had in 2018-19. Did you hear the noise? No? Anyways. Well, so this is wave 3 over here. So we are missing wave 5, and clearly, did you hear the noise? No? Anyways. So this is like a 1, 2, and wave 3, and accumulation for a triangle accumulation for wave 4 is happening, guys. If you miss this opportunity, just don't wait for me. But if you really miss this opportunity, you need to start building positions on DeFi coins. I can't give you names on which DeFi coins will survive, but what I can tell you is, because we need to wait and watch when BTC or the total crypto market cap goes to $1.5 trillion and maybe slightly lower or under $1.5 trillion. We just want to see which DeFi coins or which projects, are still holding very strongly. The team is working, the project is working. We just want to see that, and based on that, we'll make our plan. What should we buy? But looking to this whole thing, I can tell you maybe few coins that I personally think that they will be here no matter what the market does. I think Aave, we should definitely be having, looking to buy. I'm not sure if Bybit have coin margin contracts on Aave, but I just need to check it. Aave is something we should definitely hold on to. We should also be looking for some DEX exchanges, decentralized exchanges, because if DeFi explodes, those DEX are going to go nuts. For example, Uni. We have Uni, and we just need to see which exchanges survive the next bear market. Basically, this. 1 second, the notification is coming. 1 second, the alerts are coming. 1 second. It's an emergency alert, basically. Okay. So probably we just have to stay away from the window and everything. Let's hope for the best. So, guys, yeah. So this triangle is pretty much This is the triangle probably. I mean, this is the chart probably. I would just probably close my eyes and play. But for those who are simply looking to gamble in this market, probably this is not for you. Why? Because you need to absolutely have patience, and you need to have patience in this market. And I mean, it's like a. Of course, you can't just go probably 20x long, 10x long. No, you need to have patience, because what will happen is the money will definitely start flowing in first in BTC. And once BTC reaches very much close to the topping out, and then slowly and gradually, the rest of the things will start flow. So you might feel that, hey, it's like 6 months, 8 months. You heard the noise? Anyways, so 6 months, 8 months, and but my coin is not moving. It's not going to move, my friend. So because what happens is, whenever we will break out of this triangle, let's say this is a triangle, and whenever we break out, what we will do is we need at least 4 to 5 tests of the triangle. So let's say, this is your test 1. Let's say this is your highs, test 1, test 2, test 3. The next time we need test 4, and then again a breakout and a bullish retest test 5, and after which we start a very good bull run. So people would want to enter here, but we are not going to do that. We want to enter here. That's an optimal trade entry zone for total DeFi. I mean, I would not exactly wait for those levels. We'll just probably do start building positions whenever we see total starts going around these levels, these accumulation zone that we have. That's a very good levels and very good zone, basically. Okay, so that's what I have for DeFi. I don't know what you guys think about the DeFi, but just type in comment what you think about the DeFi coins, honestly speaking. And nice view. So, well, we will move on. We will move on to the BTC chart. Now, BTC, I think it's as I mentioned for the USD DOM, I think I have a same plan for BTC. The best would be to form a very solid bullish wolf phase, but I really don't think it's going to form that way, because BTC is having a slightly different price action. And when I mentioned that, the levels, this is the levels, this 0786 Fibonacci levels, 39,000 is probably the levels for anywhere from 39,000 to 36,000, 37,000 is what probably would be a good zone to buy. But what I've seen is, historically, whenever we have started losing a very good levels or a support levels, I think we look for some retest. I mean, we already had a bearish retest around 76,000. So we might just probably go for a double top. Now, the double top should happen something like this, maybe 786 Fibonacci levels, one more push up like double top, and then we start going down like this. Okay. So we do something like this, accumulation happens again, push up, and then which is what I feel as this will finish this whole 5 waves, and just going to create more and more suppression in the market, where people will feel that the crypto market is dead completely. But to the contrary, it's not going to be dead completely. It's just going to be like a good opportunity for those who really missed the previous bull run. And so as I mentioned clearly, everyone, that probably I'm just going to retire. Of course I've already retired, but about the community that we have, just going to make this community open for all from next year. Really, that's my plan, probably even by end of this year as well, because I want more and more members over here, since I was not available for the past month. And even from the beginning of the year, my things were slow. Couldn't give much time over here. I think what I feel is that I think this is now the perfect time for us to start afresh, and perfect time from 1st of April that, we have new month and we still have 9 months left to literally go for our 13 trades target. Already I've given 2 trades for Tesla and both have played out very nicely. So those 2 trades, I just booked profits on Tesla as well. It was like more than 10%. What I feel is we should not be only focusing on crypto market. We need to make money. So wherever the money comes from, it should be either stocks or gold or silver, anywhere. Okay, our goal is to make money. That's all. And you can trade on Bybit, guys. Bybit offers everything. You have Trade FI. The liquidity is amazing on it, honestly, because I play with more than on silver. The last trade I played out, I played for more than 100 lots, 20 lots per trade, and it executes it very smoothly without any big spread, and fees as well, of course, not much fees. So, and the good part about it is it don't have any swap fees, especially if you are in Gulf countries. So Gulf countries don't have swap fees. Probably, I'm not sure, but if you are in any other country, probably you just need to read the rules if they have swap fees. But if definitely it's not, they don't have swap fees for Gulf countries. Okay, because I know, I am Dubai, so I know we don't have swap fees. So which means that even if you keep your trade open for months and months, you won't get charged, okay, for having trade open on weekends or on holidays. So that's a good part. Yeah. And I think Bybit, we should, I've always been very vocal about it, but I think we should be, or you should be looking to stay away from these exchanges. Probably, I feel first is KuCoin. Absolutely shit. You just have to stay 100 feet far away from this exchange, KuCoin. Of course, I'm not targeting anyone. This is not paid anything, because this is exactly what I mentioned before FTX. And even if many guys remember, I did have an FTX affiliation, but I literally in like 15-20 days I got out of it. I've moved my funds to Bybit and everything, and in the next 7 to 8 months, the FTX just went for a toss. So KuCoin is something you should stay away from it. Also, you should stay away from Gate.io. You should stay away from, I'm not sure, but just keep your funds safe from Binance. I don't think Binance will probably lose, but what I feel is something is going to happen. There's a likelihood of funds being frozen, blah, blah, blah. You might just probably lose control for a time being or so, which might just probably create a panic like situation for Binance. And you just have to be careful, okay? And if you are also, again, I'm going to tell you that even if you have full funds, again, I would not ask you to put all your funds on one exchange. So for example, I don't have all my funds on Bybit. Of course, I have funds on Bybit. That's what I play with. But I do have funds on Bitfinex. That is important for you to diversify. For those who are in US, you can have it on Coinbase. The safest one, as I can say. Probably nobody can touch it. So for those who are in US, so you should have your funds allocated. And then once you start building positions, what you should do is you should withdraw 20-30% of your spot backs on hard wallet and just keep it safe, and you just have to play with the rest of the money with like coin margins and probably just compounding and so on and forth. So that's how probably you'll make good money in the next bull run. You don't need to trade 365 days, guys. We just need to change that mindset. I did not trade at 365 days in 2020, in 2018, 2019. Whenever I did, I've lost it. I have personally got liquidated in 2019. I think many of you guys know about it. But then I got up. I started fresh, made big with the short on XRP. That was my good trade. And then Litecoin also was a good trade as well at that point of time. And yeah, and then probably 2020 was the beast year, and so on. Now I'm here, so enjoying my retiring life, and have started multiple businesses, factories and so on with the money that I have. Because of course you just can't be lazy, lethargic. I have my own goals in my life which I want to achieve, and that's what I want to do. I mean, money is not everything. I mean, of course, but now that you have the money, you can probably use it wisely. You can invest it in your dreams, and that's what I did. I not only invested in my dreams, but of course, I created a safe passage, and then I invested in my dreams, the purpose that I wished that I would be a CEO of an enterprise, and that's what I worked on for. So I think you should also have your goals this way, and I'm damn sure you'll be very successful, inshallah. So this is what I have for BTC, guys. And the another scenario that we can look for would be a very good fake out, meaning that we can go for this level of retest around $80 to $83,000, just like a flip of like a fake break, fake flip, and then double top accumulation, and then we can have one more down like this. If this happens, then we can confirm that this move is some sort of a WXY, meaning that this move was driven by W, X, A, B, and then it will be Y, something like this. Meaning that we can just probably then look for some sort of a 1:1 extension. We can just probably we might just probably front run as well around 52,000. We might just probably not go to 39,000. We can front run, anywhere between 52,000 and 48,000. We can just simply front run if this sort of a move happens. So then we will just probably improvise our plan. We'll just play accordingly. But this is overall the plan we have. Looking to the daily RSI, the daily RSI is still looking not so looking good because it's still bearish under 50. If you look at the weekly RSI, we are still trying to flip RSI based MA line. You need to close above, and once we does close above this, and we can say that it's good. For now, what I feel is the RSI needs to form a very solid bull divergence, the way we had a bull divergence over here. Similar thing, we need to form a very strong bullish divergence as well. So what you need is something like this is what I need. The RSI should not be making lower lows. Now it's just going to make higher lows. The bigger move has already happened on 23rd of Feb, or you can even say on 2nd of March, or you can say 23rd of Feb. Yeah, we have seen the bigger movement from perspective of momentum. We have seen the bigger momentum. Now whatever we will experience going ahead from here, it's not going to see much momentum. The volume will be low on the dump, but it is going to give you good money. Why? Because we are likely going to form a very good RSI is going to form not lower lows but higher lows, and the price is going to form lower lows. This is how the price is likely going to form lower lows, and that is going to be our sign to start building long positions on the market. Whether it reaches our level of 39,000 or whether it simply goes for a front run towards $46,000, $48,000 levels, we will see. Okay. So that's what I have for BTC. For Ethereum, looking to the weekly RSI and a weekly chart, my plan is still to, build a very good position. As I mentioned, anywhere around 800 to 900 bucks, and it's fair. It's very, very, very fair. Why? The reason is what I feel at this moment especially for ETH is just look at from the perspective from ethusd. Just want to need a bit more data. Just want to show you something. Perfect. So if you just look at here, just have some patience with me. 0.70. Okay. So what I would like to see here is at this moment, just think from perspective. This Ethereum never started its bull run. Okay, so let's say this was the bull run. Okay, and this was the bull run. The bull run began in 2020, of course, and it finished in 2021. So since 2021, since 2021 till now, we are still in the bear market. It's like an accumulation is happening. This is a very good accumulation. Okay. Now there are two possibilities with this whole accumulation thing. People might even look for a crazy, maybe a manipulation on the downside, maybe a manipulation, and then we'll go for a very similar move that we have experienced like this, a same old-fashioned move, a very good move probably, we can experience from here maybe towards 15,000, 18,000. Don't expect 35, 36,000. No, I'm not going to give you the crazy targets, but we are in accumulation at this point, meaning that that Ethereum is clearly doing ABC move, meaning that whatever we have seen so far is some sort of A. This was wave B, and right now we are doing wave C at this moment, or this can be a very good WXY as well, but at this moment this is clearly ABC, and this is what I can see so far. Why? Because it already have an internal or intermediary A, B, and C. The C was very sharp, and it was good. Okay, and we are now in the wave C. I mean, if this is wave C, it will simply go straight away, meaning that we can just have probably something like this, one more down, go to $900 to $800, anywhere under this, as I mentioned, anywhere. I mean, $800 to $900, and after which this whole accumulation completes. Irregular, expanded, flat, complete. So we started this pattern, accumulation complete, and we go run up like this. So if we are lucky, and if we do happen to get these levels of $800 to $900, do not listen to anyone, including myself. If somebody tells you that Ethereum is going to go towards $500, $400, just forget about that nonsense. The best way you can make money off this whole bull run is by buying the spots and then slowly and gradually compounding on coin margin contracts. Okay, so coin margin longs is what is going to make you super rich, and probably I can bet probably many of you will retire as well along with me, inshallah. So Ethereum is what this big plan is. Now if you look at from the Fibonacci level, the targets, Ethereum is yet to reach its good levels of what you can say 2414 Fibonacci levels. Now if you just look at from the bull run targets, normally we go towards 24. It's a bare minimum target, very bare minimum, but you can even look for, if we are lucky, we can even go for the bigger targets, which would be around 3618, or the best would be 4236 as well. But it's just like a bigger target, but 2414 is like this is going to be your bull run target, a very bare minimum target. What you can expect anywhere in between, this is like a bare minimum target for ETH. And maybe if you're lucky, we can go for 21,000, like some sort of like let's say it's just going crazy. This is some sort of 1, 2, 3, 4, 5. So let's say if this is some sort of wave 1 and this is wave 2, if it goes for a wave 3, yeah, it can go crazy up this way towards 21,003. Then we go up here, wave 4, double top, and then come back down to something like this is a possibility. Okay, so yeah, because of this whole crazy crypto market cap can go towards a market cap of $15 trillion, anywhere from $10 trillion to $15, anywhere in between. Ethereum can do solid because of ETH BTC. If you remember, ETH BTC is perfectly playing out the way I've already laid out to you a month before. The plan is still same, no changes. So this is a very realistic target. This is a realistic target, $12,000 to $13,500. In case if things go nuts and out of hands, we can just probably see a week two here towards here. I mean, maybe if Ethereum in institutions starts burning ETH, more ETHs are getting burned, the supply is getting restricted, and so on and henceforth. Yeah, we can see the spike. But with this supply that we have, I'm not sure if it can go to 21,000. But let's just see. What if Ethereum goes to 21,000? What will be the market cap? So let's say current at the price of 2,137, the market cap is $257 billion. So let's say from the current price, okay, if ETH needs to do 5x, ETH can do roughly around 5 to the 10, 5 to the 25, $1.2 trillion. Okay, 5x still here. So $13,000 is a possibility. Okay. But let's say if Ethereum needs to go $21,000, which is going to be roughly around 8.5 to maybe roughly around 9x. So from $257 billion multiplied by 9, which is roughly around going to be 2.1 to $2.2 trillion market cap. So now whether this is some crazy numbers or not is something one chart can tell you, which is or you can say two charts can tell you, which is going to be ETH BTC. So ETH BTC is crazy doing something like this. And what I feel from this logarithmic chart is clearly very good accumulation happening. You need a little bit more down towards 786, and after which once it breaks out, I expect double top sort of thing. And once that happens, would meaning that ETH BTC is clearly from the current price is going to outperform BTC by 4x. A minimum 4x outperform is going to happen. So let's say if BTC does 5x, Ethereum does 10x. Clearly 10x, which means that it can easy peasy go to my target. As I mentioned, a 10x target. Which chart we were doing? Yeah, crypto over here. So yeah, it can clearly go towards 10x targets, which I think it's very fair and reasonable, guys. So DeFi, of course, is going to do good, but Ethereum, you can say that 10x is a very realistic price. And 10x means that, yeah, 20,000, 21,000 is a very realistic levels probably we can expect and we can see for Ethereum. So $21,000. So if you really miss the, BTC bull run, BTC buying at $800, $900, I mean, this can really be the levels, the coin that probably can make you super rich, guys. In case if we really happen to get that $900 to $800 levels, I'm simply going to break my purchase like this way, that 40% BTC, and we'll go with 40% ETH, and I'll just go with the rest of 20% with DeFi coins, or maybe just probably 20% I'll just probably see. I mean, Solana we have, then we have Ethereum ecosystem, so just go with the Ethereum ecosystem as well. So this way, we'll just have my investments. So Ethereum is what we have, and you should not miss it. So you need to remember DeFi coins. You need to remember DeFi coins, and you need to remember Ethereum chart and BTC chart, of course. Solana, at this moment, it's very difficult for anyone to talk about the individual coins, but this is the chart exactly what I drew before March, my last stream that I had in February. So this is what I drew, and I was expecting more downside on the red box, but that is exactly what I still expect from Sol. I still expect Solana to give us that one final moment of downside in this red box. Now this can happen in two ways. Either we go up here as a retest and then come down, or simply we go down here accumulation happens, and then we run up. So I think the best level for Solana is from $50 to $45, a very good zone for buy. The worst case scenario, as you guys know about it, the worst case scenario will always be around $20, $30 levels, because it has bottom around $11. So that is going to be your worst case scenario. But I do believe $45 to $50 is a very good levels for Sol. We have good support over there. Okay. Talking about Tesla, I book profits. What we can expect from Tesla, I'll just probably tell you. We took 2 shots. Both the shots make good profit. What I can expect from Tesla, something like this we can expect, and it's a very good, some sort of a bearish retest, double top. I will likely going to short Tesla again around tomorrow after Trump's speech. I don't know what is he going to speak about, but this is what we can expect. And we have a gap here, so I believe that we will close this gap. And also, I would like to see it going towards 786 Fibonacci levels. Maybe. We can also look for a little bit more downside. Maybe if things starts dumping down, we can even look for maybe $100 or so for Tesla. I'm not sure exactly, but yeah, the possibility is always there. And we have this harmonic playing out. The harmonic is still valid. It has not been invalidated. It's still playing out. The shark is not invalidated. So I believe that any price under $416 is for shorting. You have the upper range. This is your upper range. So anywhere under these level is for shorting. You just have to keep on shorting it, and you're gonna make good money out of it. Let's talk about gold, guys. Gold is pretty much looking great. This was my chart. I never changed it. I mentioned that we are likely going to retest the 2026 opens and maybe slightly under, and that's exactly what we did. I think few days back. Yes, we did went to, I remember, 4,000, somewhere around 4,344, like 2026 opens, and then we started running up. What I feel is what we are likely going to do is, so this is, let's say, some sort of a 1, 2, 3, 4, 5. We're just gonna do something like this. Maybe a retest is likely possible, but something like this, and then we're gonna for ABC. Again, something like this, and then run up. So we just need to form some sort of we need to break a trend. I mean, I have seen this chart playing out on BTC as well previously. So this is a clear A, B, C, 5 waves. So ABC is done. Maybe one more wave is still a possibility, but I'm not sure. I mean, you just need to see whether things get invalidate or not. Yeah, 4,800 is going to be invalidation of wave 4. So if we go above or beyond 4,800, something like this, which means that the bottom is in, and any dip next towards 2026 opens, and then it's going to be clearly your buy. Okay, it's going to be clearly your buy. So if you just inverse this whole chart for gold, what you can see here is, so this is your lows and this is your highs. Okay, so you clearly got a very good deviation on the top, and we just have a good liquidity under these levels. So what we can expect, and this move is clearly A, B, and a very nice impulsive move, wave C. So what you can expect on the daily time frame is some sort of a RSI, forming a very good bull divergence over here. Yes, we do have bull divergence from here as well. And on weekly we are at support of 50%. So I think gold is getting ready for a run up. So what you want to do, you should be looking to start buying, accumulating it. So the next levels probably for a retest would be $4,400 to $4,300 is what probably you should be aiming to start buying, accumulating gold. And I would like to see something like this for gold. Clearly, because I have seen this pattern on Matic, on BTC as well, and every damn time it plays out. So we can expect a target of 6,000 by end of this year. I still stand with my target for gold, and that's what I feel you should have. I already bought gold around 4,096, 4,124 with the physical gold, of course, not the long position I have. But if we do, I do think it's going to come down. A retest is going to happen around 4,400 to 4,300. You should buy it. Silver, again, silver. This was the chart from my previous, live stream. And clearly this has played out. We went to wave 3 around golden pocket zone, $64, slightly under those levels as well. Now that we have done this wave 4, there are two possibilities over here. Either this is the wave 4 and we see one more down like this, one more down, and it finishes this whole thing scenario where the wave 4 is going to finish. I'm just gonna make it a logarithmic scale so that you guys can see exactly the price action. So, and the wave count that I have, this is what I presented to you in the last stream. Our invalidation is $50 for this whole up move, and my target is $178 minimum, and an extended target of $387. So I can just probably put over here 2414 as well of $300 as well. So this can be a bigger target of $300. This is what we can target. 1618 is what a bare minimum we can expect, after which a little bit more accumulation and then further push up till 300 or push past $300 is what I can expect. Invalidation is the red line. Anything under this is like shit. I mean, sell your silver and get out of it is what you can say. So I don't want to see RSI because I know this is how it's going to play out. Look at this, RSI is at support. We just need a little bit more sideways accumulation. So yeah, I mean, you just have to start betting on silver slowly and gradually, which also brings me to my point is, let's say if it goes for one more move on a downside, let's assume that it goes one more down, good for us, you just have to simply buy. But what if it just don't go downside? What if this is simply 5 waves are done and this was your 5 waves, the bottom is in, similar to what we have for gold basically. So if that is the case, what will happen, or what is likely going to happen, is we are going to form 5 waves, meaning that this is 1, 2, 3, 4, 5, I mean like some sort of a 3 drive, and then we go for A, B, C. Just need to take up liquidity around $66. So we just go around $63, $62. We hold the lows of 61, and from there, we start trending like this. This is how the trend will shift. Rejection will happen like this, and then breakout, and then boom, we go for 180, 177, $180. That is going to be our first take profit targets. Clearly from $65 or $63 to $180 is roughly around 2.9 to 2.8x gains basically. So silver is bullish, and definitely bullish. For spots, I can't buy spots at this moment in this situation circumstances. So what I'm going to do is, in UAE of course I can't buy it. So what I'm going to do is, I'm just gonna open 1x position of, let's say if I really wanted to buy X amount of silver, what I'm gonna do is I'm just gonna have a very similar amount of silver position of 1x leverage on, or maximum 3x leverage on TradingView on Bybit. Okay, so that is, it don't have premium, and I can really get in and out quickly and make good money on it, and I can just probably hold it for longer, so that's one thing. The second thing is, if in your country, if silver is literally trading in premium, then this is exactly the best way in my view as well, that you should also be following the TradingView instead of buying physical silver. Because what might happen is, that if you go to sell your physical silver around $200, maybe even $300, maybe you might just not get an exact amount, because there will be a huge gap in physical versus, I mean, the sale price versus the purchase price. The spread will be huge in the physical market, you know. And if you look at from, okay, so can you also shed some light on 13 swing plan? So as I mentioned, you know, 13 swing plan is already started. I don't know whether many of you notice about it, but Tesla short, we already did twice on Tesla. Nvidia, I closed it. But yeah, we already started. What I can tell you is my 13 trades are not only going to be the crypto trades. It can be anything from crypto, stocks, gold, silver, oil, whatever. But we just want to make the 13 trades, and that's it, because you can move money from Bybit futures to these things. So we need to finish the 13 trades before BTC bottoms and before things bottoms. You know, we need to finish this 13 trades before those levels. That's what my aim is. Almost a year I came to see the market. Perfect, bro. Welcome, Amjad Ali. Hype should do well as well. We will see, bro. I'm not sure about hype, but we will see at that point of time whether which coins survive is important. Stay safe, brother. Thanks. Gold and silver, good bearish engulfing candle monthly. So what will be next? So let's say for gold, talking about the monthly candle. Monthly, yep, you got a very good bearish engulfing candle on the monthly. So what happens next when you normally get a bearish engulfing candle? So there are two possibilities over here. First of all, if you literally go for the bearish engulfing concept, meaning that we can go till 786, which is 5,140, as some sort of a, you know, retest, and then we can go for one more sweep on the downside towards 3,900, maybe even 3,000, somewhere close to $3,900, a bigger ABC in play, and then accumulation happens and then run up. Okay, that's the first way of doing it. The second is we literally invalidate this bearish engulfing candle. Now, invalidating this whole monthly bearish engulfing candle is slightly tricky, because if you just look at here, we have never invalidated. This is engulfing. This is engulfing. You see, I mean, just like a double bottom, and then go up and then further down. Engulfing. This is also an engulfing candle. So we go down. The times when we have not played out, I mean, this was an engulfing, but this was not at the top. It was in between. But this was still an engulfing, and we got a move on the downside, sweeping at the lows. So yeah, probably, as I had mentioned, the plan for silver, either this or maybe one more down towards 58, and you know, $58-$60, one more down like this, and go up. Yeah, possibility is there. Maybe for silver, possibility gold. I mean, if we go one more down, maybe, but I don't have the wave count actually. So let's say this is A, B, C. So this is going to be your W. Then you have A, B, C, A, B, C, A, B, C. Like this, we go for 786 pip, and then we go for A, B, C, one more down. It's going to be W, X, Y, similar to what we have seen for BTC. You see, I mean, we have seen a very similar thing, a very similar fashion we have seen for BTC. See, so you have A, B, C, then you have A, B, C, and then you have A, B. Out of nowhere this move came. So we were just expecting this move, and out of nowhere this move happened. Okay, so possibility is there because it has engulfing candle. So even if it has engulfing candle, it should not go not close under $3,800 and $3,800, meaning that, let's say, even if we go down under $4,128, we should not be going more than 6 to 7%. You know, this is what max we can go down. So I think $5,126 to $132 is your deciding factor for the market. If you flip over here, your bearish engulfing gets invalidated, and we just simply run up to $6,000. And this is what I have for silver. Either, you know, we hold here, or maybe one more down like this, flip it up, accumulation happens, higher highs, and not lower lows, but higher lows, higher highs, higher lows, and then boom, like this, we start. Okay, so that's all what I have for the overall market, guys. And of course, let's connect daily with the energy, with the motivation we have to keep on going. And again, guys, my sincere apologies to each and every one of you. And whatever the queries you have, just post it on X or on the Discord, guys. I will be happy to assist you, and let's be active over there. I'll be active as well. We keep chatting with each other. I'll be more active, guys. So thanks a lot. You just have to keep on chatting with me. You just have to push me, guys, because I know I need someone to push, and you guys are my, you know, strength. So you need to push me, and basically we'll just work together, of course, but you have to push me, guys. Thanks a lot, guys. Bye bye, take care.